Just had the unemployment number drop at 3.8%. Ross Greenwood is with us. Ross, what do you make of it?
So this is coming lower than expected. So one of the important things about this is that employment numbers are key to the future of interest rate moves. That's what's important here. But the reality is that the very strong job numbers that continue in Australia, this was forecast to be 3.9%, really do suggest that the Reserve Bank has got no reason right now to immediately cut interest rates. I think that's the reality. And as you know, more economists are now suggesting there will be no rate cut in Australia this year. Just going through it, a lot of people had thought that the February numbers might have been an aberration, mainly because the number of people re-entering the workforce in February came after a January when a lot of people decided to literally take the month off. But you can see here that this unemployment rate has pretty much been broadly flat over a period of time since pretty much the last 12 months or so. 3.6 now sitting at 3.8%. It really hasn't taken off to around 4.25%. Which was largely seen to be the point at which the Reserve Bank would start to act and to cut interest rates. But the other truth about this, Kieran, also is just the number of jobs. The participation is very, very strong in the workforce. And bear in mind that this unemployment rate has stayed as low as it has while we've had significant migration coming into this country. And so even those new migrants seeking work are finding that work as well. So amongst some of the key stats that have come out is the number of jobs basically created during this period of time is again increased. And you can see also that the number of people who are employed in Australia has now gone through 14.25 million people. So from that point of view, this is good news for our economy, but probably bad news for those people who are probably looking for an interest rate cut anytime soon.
So there had been, as you alluded to, an expectation that there'd be a correction this month. It's not as big a correction as many had anticipated, Ross.
It's so true, because remember that the unemployment rate had fallen to 3.7%. So broadly, in the expectation, with high interest rates, with a slowing economy, you should get more people out of work. But that just hasn't happened. So here's the key numbers. The number of employed people fell, but the participation rate is also down. So the number of hours overall worked is starting to rise. So this has led to a small tick up in the unemployment rate, but certainly not as high as many have anticipated. Now, it'll be just fascinating. If we go a little further forward, I think we can even have a quick look at the money markets and just see how they've reacted to all of this. And in particular, having a look at the Australian dollar, which has just come off that little bit since this number has dropped about 0.1 of a cent. It's dropped since that point in time. So that's one key. The other one will be long-term money market interest rates. Now, they've been rising in Australia for quite some time. So these are the one-year bond yields, and you can see they're higher off the back of this number. And that's in anticipation that the Reserve Bank will not be cutting interest rates as soon as many as had suggested, with some, of course, previously having said there would be 3 interest rate cuts from September this year.
Yeah, it's really interesting looking at this number, Ross, because let's fast forward to next week and the CPI number due. There is a view that number again will fall. So if we get the inflation number getting back to near the target band, but unemployment stays resilient, the labour market stays as strong as it is, how does the RBA weigh all of that up? If inflation is getting back to where it needs to be, that could be the ultimate soft landing, couldn't it?
Well, it could be the ultimate soft landing. And the tough thing, as you know, Kieran, is here, if the Reserve Bank were to start considering interest rates earlier, it would fly in the face of what's taking place in America, where the economy has picked up. And in fact, it's actually much stronger now in the US than what was anticipated. And so now they're suggesting that the interest rate cuts, and again, they were talking 3, even the Federal Reserve was suggesting that, now maybe further out into the future. And so Australia, really, it's going to be interesting to see what the economic growth numbers come out when they next come out, because if they start to show signs of picking up, it's going to then come down to that inflation number that you're talking about out next week. And again, if the trend is that continues to fall, then in the face of a very strong jobless or very strong jobs market, that the Reserve Bank would be pretty brave to start considering cutting interest rates anytime soon, I would suggest. But as I say, it's going to be fascinating just to watch what happens if inflation is coming back to that target band.
Indeed, Ross. Thanks as always. Appreciate that.